Hey gang, how you doing? It's Anthony Carr here with Remax West End in Northern Virginia. We're talking about avoiding taxes when you're selling your rental home. I know that some folks may not have investment property yet, but eventually you might in Northern Virginia. About 13% of all the houses in this area are actually absentee owner properties. So the owners have moved along and they now have a rental property. So we're going to talk about selling your rental property, rolling those funds over to a new property, and how to do that and avoid taxes in the process. So why this video? Well, what I found out is I was going and doing some research and surveying for the investment properties in the area over the years. Most Northern Virginia investors owned one rental property. That is it. These are not properties that are held on by some big corporation that owns hundreds and hundreds of real estate properties. Most of the single family and townhouse properties in Northern Virginia are owned by one investor, and the investor only owns one property. So I thought, I bet you there's a lot of them that probably aren't really aware of the 1031 exchange or the nuts and bolts about how it works. So hopefully this gives you some information on what you can do to avoid some taxes in the future. First of all, the 1031 exchange, it's named after a code of the IRS. It's a 1031 exchange, where what you're doing is you are exchanging one rental property for another. And what you're doing is you're avoiding taxes, but really you're delaying the capital gains taxes on the sale of your rental home. Now, about a week or so ago, I did a video on taxes on capital gains and how to reduce that as a private homeowner. If you're a homeowner that is an investor, you do not get the exemption that the private homeowner gets when they sell their property. So you start owing taxes right up front, and that's what we're going to talk about. So warning number one, when you sell your property, the seller cannot receive the money from the sale right at the start. You must get an intermediary to take over those funds and to hold on to them in escrow until you're ready to close on your second property. It's called, I'm relinquishing a property. That's the home that you're selling. And then I am getting a replacement property. That's the home that you're buying. The intermediary hangs on to the money from the proceeds of the sale of that property to then send it to you when it's time to close on your next property. So on this point, I want to give you a recommendation of a group called Realty Exchange Corporation. They're right here in Northern Virginia. They're a second generation organization. I don't get any fee and any money from them for promoting them. It's just, this is a group that I have used with my exchanges, and they do a really good job. They've been doing it for a long time. The website is www.1031.us. So if you want to take an even deeper dive on this thing about exchanges, go to their website. They do a lot of educating on that as well. Warning number two, don't drag your feet when you are in the midst of selling and replacing. You do not have a lot of time to get that transaction done. You can't sell it this year and buy it in next year, unless next year is within the confines of the dates I have here right now. The first is you have 45 days to find a new house. And after you found the new house, the whole process of finding the new house and closing cannot take longer than 180 days from the time that you have sold the relinquished property. It all has to be within 6 months. So you got 45 days to find the house, and then you have the remainder time of that to close. So the total is 180 days. So if you find it within 30 days, then you have 150 more days to close. So just make sure that you understand that you find the property, but you're not hanging on to the money. You do have an addendum in that contract in our area that it lets everyone know, hey, this is a 1031 exchange. So there's going to be money coming from a third party called the intermediary. The exchange means that you're going from a rental property to a like kind investment. You may not have a rental property. You may have something else that's a little bit different. What it means is that it's real estate. It's not house for house, okay? You could have a residential property that you're purchasing. You could have a commercial, a warehouse, office property, what you see here on the screen. It just means that it's a real estate investment that you're exchanging. And it can be anywhere in the United States. It doesn't have to be in the local area or in the state. So those are some of the benefits there that you have there. Warning number 3, the sales price of the property that you're picking up after selling, it has to be the same price or higher. So you can't sell a house for $750 and go buy one for $500 and walk away with $250 grand in your pocket. You have to buy, if you sell for $750, you got to buy for $750. The good thing about that, though, is that it doesn't have to be one property. You could buy more than one property that can be purchased with that. So you sell for $750 and you get 3 for $250, or you get 1 for $400 or 1 for $300. It just has to be the same value once that replacement happens. There's an example here. You relinquish a property at $500, the replacement property is $2 at $250, or any combination that amounts to $500,000 or more. So that's a little bit of information on that part when you're looking to exchange. Be smart. Talk with a real estate professional. Also, you want to talk with a tax accountant. You want to make sure that you're taking care of business when it comes to this, because the penalty can be quite severe. I hope this was helpful to you. So it's going to help those who are looking to hang on to real estate as an investment and go from one real estate investment to another and not try to cash out. Thanks so much. If you like my channel, please subscribe, like the video, and share with someone that could benefit from it. Thanks so much and have a great day.